Welcome back to the Pro Ticker podcast, everyone. It's Wednesday morning, and as always, we're here to cover some major financial magazine headlines. You've given us a ton of news to go through today.
We really do.
A lot to untangle, and as always, we have our sources laid out in front of us, a stack of Bloomberg's Wall Street Journal's market watches.
Absolutely.
We really want to get beneath the surface of these headlines for you. Extract those key insights. Where are the potential investment opportunities? What's going on in the economy? Are there any factors that could lead to instability?
Yeah, we've got a pretty dynamic landscape out there right now. And as you mentioned, tons of information to try to parse through and help the listeners understand what does this mean for them.
Absolutely. Okay, so let's get started. I think we've got some analyst activity that is worth noting. CNBC ran a piece, Buy the Dip in Stocks Like Alphabet and Block, Chief Investment Strategist says. And this is featuring Eva Anatos, who's the COO and Chief Investment Strategist at Shares. And she's saying, buy Alphabet, Google's parent company, and block.
Yeah, and I think what's really interesting is she talks about why. And when it comes to Alphabet, she's got a couple of things that she highlights. One is she believes it's trading at a discount compared to its peers.
Oh, okay.
So that kind of begs the question, what's the market missing?
Right.
The second point she highlights is Alphabet's acquisition of Wiz,
A cloud security firm?
a cloud security startup. And this is actually their largest acquisition to date.
Wow.
And she views this as, very strategic in terms of vertical integration.
Okay.
And, a fun fact, she says that they've actually been a customer of Wiz for many years.
Oh, wow.
But, it also addresses a major national security issue.
Okay.
So it's not just a bonus, it's kind of essential.
Yeah.
And this deal is expected to close in 2026.
Oh, wow. That's quite a ways out there.
It is. But I think what's really insightful here is that it shows the growing intersection between big tech and the government. And so I think this could be a trend that we see more of moving forward. Big tech making acquisitions in spaces like cloud security, which obviously is a huge growth area.
Yeah.
And has a lot of long-term relevance, I think.
Absolutely. So Alphabet stock did dip recently. It's down about 15% year to date, but she points out that it's trading at about half the price to earnings ratio of its peers.
Right.
So, is this a chance to buy the dip on a company that is kind of, undervalued, making some strategic moves in kind of a mission critical sector?
Absolutely. And Block is another stock she's got a buy rating on, and this one has fallen quite a bit. It's down about 30% this year
Wow.
and 80% since its COVID peak.
Oh, wow.
But what she thinks is compelling is that despite that drop, their EBITDA margin has more than quadrupled in the last year.
Okay, so can you just explain EBITDA margin really quickly? I think that's helpful.
Yeah, so essentially this is a metric that tells us how profitable a company is from its core operations.
Right.
So before we factor in things like interest, taxes, depreciation, and amortization, so the fact that it's quadrupled suggests that their underlying profitability has really turned around,
Okay.
which is a strong signal for investors.
All right, so big turnaround for Block. And she also says there's a potential catalyst coming up,
Yes.
which is that they acquired Afterpay, the buy now, pay later firm, back in 2022. And she thinks that the potential IPO of Klarna, which is a competitor, could really energize the whole fintech space.
Absolutely.
And, all boats rise with the tide.
Exactly.
And it's worth noting that KBW upgraded Block to outperform.
Yes.
So you've got a number of factors here that are pointing in the direction of a buy.
Yeah, so you've got this price decline, you've got this improved profitability, and then, a potential boost from this IPO that's on the horizon.
Okay, so there's a lot to like about Block, according to her.
Yes.
Now let's talk about Ralph Lauren, because this is an interesting one. Eva Ados actually has a hold rating on the retailer. Even though their revenue growth is pretty healthy compared to competitors and their profit margins have improved, she is concerned about the economy and the potential for consumer spending to slow down, particularly for luxury goods.
Sure, and I think that's a really important question to ask. Is the economy heading for a recession? How resilient is high-end consumer spending?
Right.
Because even though, they've had some positive trends in their financial performance, there is that uncertainty about the future.
Exactly.
That could definitely impact, luxury purchases.
Right. And interestingly, Goldman Sachs actually upgraded Ralph Lauren to a buy on the same day.
Wow. Good.
They cite an attractive entry point after the recent sell-off, and their rationale is that Ralph Lauren has limited exposure to these near-term risks, like tariffs and the health of the lower-income consumer.
Okay.
So you've got a difference of opinion here. You've, one analyst who is looking at the macro environment and saying, I'm not so sure. And you've got another analyst who's saying, hey, this is a good company. And they're kind of insulated from some of the risks that are out there.
Yeah, and I think it really highlights, that investment decisions are complex.
Mm-hmm.
And, one analyst might be emphasizing macroeconomic headwinds. The other might be saying, well, they've had this price movement. I think it's a buying opportunity.
Right.
It's really important to consider your own, time frame and your own risk tolerance.
Absolutely. Okay, so let's move from individual stock calls to some broader market movements. We've got a Bloomberg article here with a little bit of a scary headline.
Okay.
Emerging market currencies drop as sell-off spreads from Turkey. So this is definitely something that I think we should pay attention to.
Yeah, and it's interesting how a localized political event in Turkey can actually create this ripple effect across the emerging markets.
Yeah.
So what happened was that the Turkish lira plunged to a record low after President Erdogan's main rival, who's the mayor of Istanbul, was detained. And so, what we saw as an immediate reaction in Turkey was the stock index slumped, government bond yields soared, and trading was actually suspended for a little while.
Yeah, that's a huge sign of just, instability.
Absolutely.
Yeah.
And so I think that's what unnerved investors.
Yeah, makes sense.
And it spread, the concern spread to other emerging markets, particularly in the CEE region.
Central and Eastern Europe.
That's right. So we saw the Hungarian forint weaken and the Polish zloty also weaken against the euro.
Okay.
And so, I think this is suggesting that there's concern about political risk and instability in the region.
And the MSCI EM Emerging Markets Index was trading lower as a whole.
Yes.
So this is, not just a Turkey story. This is a broader story.
Yeah.
And then interestingly, Ukraine's dollar bonds were actually underperforming Turkey's notes after the U.S.-Russia talks on Ukraine failed to make any progress.
Wow.
So it just shows how interconnected all these geopolitical risks are.
Absolutely. And it's not just about the currencies either. Different emerging markets are reacting in different ways. So, for example, Indonesia's central bank has kept interest rates unchanged.
Okay.
Which is probably a way to try to support the currency in the face of potential capital outflows.
Okay.
Whereas Brazil is expected to raise its benchmark interest rate in its upcoming meeting.
Okay, so different reactions to, kind of a similar set of circumstances.
Yeah, exactly. They're facing their own unique pressures.
Makes sense. Okay, well, let's talk about what's been on everyone's minds, which is, what is the Federal Reserve going to do next? We've got a couple of Bloomberg articles here. Investors look for Fed's take on growth after U.S. bond rally. Powell's remarks to be scrutinized as Fed set to hold rates steady. And then we have MarketWatch asking this question: will the Fed make interest rate cuts this year because of good news or bad news? So it seems like there's a lot of uncertainty about what the Fed might do.
Yeah, there is. And I think the general consensus from all these articles is that the Fed is likely to keep interest rates steady at their upcoming meeting. So they're in this wait-and-see mode, I think. And, they're evaluating incoming data and weighing all these different factors like President Trump's trade policies and the trajectory of economic growth.
So, they're trying to figure out which way to go here.
Right.
But the markets are going to be watching very closely every word that Jerome Powell says.
Absolutely.
And also looking at their economic projections, particularly that dot plot.
Yes.
Which, as you know, is where each member of the Federal Open Market Committee expects interest rates to be in the coming years. And Bloomberg points out that the uncertainty surrounding potential interest rate cuts in 2025 is increasing. The market is actually pricing in fewer cuts now than it was earlier this year.
Yeah, and this is a really interesting shift in sentiment, right?
Yeah.
Initially, I think there was a lot of optimism around these rate cuts.
Yeah.
People were expecting multiple cuts throughout the year.
Right.
But now I think there's this growing recognition that maybe they're going to keep interest rates where they are for longer, because of inflation, which is still pretty persistent. And, the labor market is still fairly robust. So some economists are talking about this possibility of stagflation.
Okay, so can you break that down a little bit? What does that mean?
Yeah, so essentially it's this idea that we're going to have slow economic growth and high inflation.
Okay.
So
yeah,
not a great combination.
Definitely not.
And, that seems to be kind of a key concern that's coming out in the Bloomberg analysis.
And the MarketWatch piece asks this really interesting question. Will potential rate cuts this year be because of good news or bad news? So is it because inflation has really come down and the Fed can, kind of breathe a sigh of relief?
Yeah.
Or is it because the economy has really weakened
Right.
and they need to do something to kind of prop it up?
Absolutely.
And the article raises the point that, with President Trump proposing these tariffs and then our trading partners potentially retaliating this could really complicate things because it could reignite inflation.
Exactly.
And then what does the Fed do?
Yeah, it creates a real dilemma, right?
Oh.
Because if those tariffs lead to higher prices, they might not want to cut interest rates,
Right.
even if the economy is slowing down.
Right. So they're caught between a rock and a hard place.
Exactly.
And it just adds to this uncertainty that we're talking about.
Yeah.
And the fact that, economists are divided on the number of rate cuts
Right.
just further underscores that uncertainty.
Absolutely.
So there's also this other piece of the puzzle, which is quantitative tightening, QT.
Yep.
MarketWatch has an article, Investors are on edge about potential changes to the Fed's balance sheet plan. And, it's true, the Fed is shrinking its balance sheet,
Yeah.
but there's a debate about whether they should slow down or even stop.
Right. And it's another tool that they have in their monetary policy toolkit.
Mm-hmm.
So essentially what they're doing is they're selling back some of the bonds that they bought during times of stress.
Right.
And this reduces the amount of money circulating in the financial system.
Okay.
So it could have an effect on interest rates.
Got it.
And so, if they signal that they're thinking about slowing down or pausing this QT,
That would be a big deal.
that would be a big deal. Yeah. It would suggest that they're, taking a less aggressive approach
Right.
to tightening.
Sure. Yeah.
So the Fed wants to reduce the level of bank reserves from what they consider abundant to more ample.
Okay.
But, there's debate about what that level actually is.
Right.
And, some Wall Street firms think that the Fed will end the balance sheet runoff by the middle of this year.
Okay.
And others, like the chief economist at Mizuho Securities, think that they should end it sooner rather than later.
So it's another thing to watch closely.
It is.
Yeah.
Yes. And I think, they're going to be very cautious this time around because remember back in 2019,
Oh, yeah.
they had to reverse course on their previous QT program
Right.
because money market rates spiked.
So they don't want to repeat that.
Exactly.
Okay, so let's shift gears and talk about oil. Bloomberg has a piece titled Latest Oil Market News and Analysis for March 19, and it looks like oil prices are falling again.
They are down for a second straight day.
Okay.
And the main reason for this seems to be this reported build in U.S. crude stockpiles.
Okay.
And we got that from the American Petroleum Institute data.
Okay.
There are also some lingering concerns about trade tensions
Okay.
and how that might impact global growth.
Which would impact oil demand.
Exactly.
Yeah. Yeah.
So the market is going to be watching the official inventory data
Mm-hmm.
and also the Fed's interest rate decision.
Right, because that could have, a big impact.
Absolutely. And there's this broader risk-off tone in the markets right now.
Okay.
So I think people are getting more anxious about this potential slowdown,
Right.
which is dampening the outlook for demand.
Okay, so oil prices are down from their peak in January, and there are a number of factors at play here.
Yeah, so on the supply side, OPEC Plus might increase production. On the demand side, you've got these trade disputes
Right.
that are a concern. And consumption in China is weak.
So a lot of things are kind of weighing on the oil market.
Exactly.
Okay, let's switch gears again and talk about something a little bit different. The Wall Street Journal has a piece, NASDAQ plans second U.S. headquarters in Dallas, Texas. So this is interesting because NASDAQ is, synonymous with New York City.
That's right, Times Square.
right.
But yeah, they're establishing their very first regional headquarters in Dallas.
In Dallas.
Yes. And, they're calling it Y'all Street.
Okay, I love that.
Yeah. They're really embracing this shift, I think.
Absolutely. And it's not just about listing companies. They're also going to have technology operations there and financial crime management operations. So this is, a significant move.
It is. It is. And I think it's part of this larger trend.
Right.
More and more financial institutions are expanding into Texas.
Right. We've seen the emergence of the Texas Stock Exchange. And even the New York Stock Exchange is reportedly planning an electronic trading platform in Texas.
Yeah.
So Texas is really trying to become a financial hub.
They are. They are.
And they're taking some steps to do that. The article mentions Texas business courts, which are these specialized courts for complex corporate matters.
Yeah.
And there are also some bills that are being proposed to make it easier for companies to reincorporate in Texas.
Okay.
And then you've got people like Elon Musk who are very vocal about, the benefits of doing business in Texas.
Absolutely.
So it's a developing narrative
I get that.
of, this potential shift in the center of gravity for American business and finance.
Yeah.
Texas is making a play here.
They are.
Okay, so let's move on to a story that is maybe a little bit more on the fun side. MarketWatch has a piece, Netflix paid $55 million for a show. Prosecutors say the creator blew it on Rolls-Royces and crypto. This sounds like a wild story.
It is, and it really highlights the competition that was going on during the streaming boom. So prosecutors are saying that back in 2018, Netflix paid $55 million to a writer and director named Carl Eric Rinch for a sci-fi TV series that he never delivered.
Oh, my goodness.
And so instead of, using the money to make the show, he allegedly spent it on 5 Rolls Royces, expensive mattresses, some biopharmaceutical call options, which didn't work out.
Oh, no.
And some cryptocurrency investments.
So some of it maybe worked out.
Yeah.
Okay, so it just shows the risks that are involved when, these streaming companies are just throwing money at content
Absolutely.
and hoping that something sticks.
Yeah, and the fact that they gave this money up front to, somebody who's relatively unknown.
Right.
And then he allegedly, misused the funds.
It's an interesting story for sure.
It is. It is.
Okay, let's talk about NVIDIA. Marketwatch ran a piece. NVIDIA's stock falls after GTC. Here's why Wall Street wasn't so impressed. So NVIDIA CEO Jensen Huang gave this really enthusiastic keynote at GTC,
Right.
which is the GPU Technology Conference, but the stock actually fell afterwards.
Yeah, and I think this is a case where, NVIDIA's got this great long-term outlook, but the market was maybe hoping for something a little bit more, immediate.
Right.
In terms of a catalyst.
Yeah.
And so I think, they were looking for this magic rabbit, this new product or strategy that's really going to drive revenue growth.
Mm-hmm.
And they didn't really get it.
Yeah. And so Jensen Huang talked about robotics and quantum computing, which are obviously very exciting.
Yeah.
But those are longer term plays.
Right.
Those aren't things that are going to move the needle right away.
Yeah, they need these proof points to justify the valuation.
Right. And so NVIDIA did announce their product roadmap.
Yeah.
They talked about platforms like Vera Rubin, which is expected in the second half of 2026, and then Vera Rubin Ultra and Feynman in the years after that.
Okay.
So, they've got this long-term vision.
They do.
But I think the market was looking for something a little bit more...
A little bit more immediate.
Right. Okay, so CNBC has a piece with Barry Ritholtz talking about the power of compound interest.
Mm-hmm.
And, this is a basic principle of investing, but it's always good to be reminded of it.
Absolutely. I mean, this is the cornerstone of, building wealth over the long term.
Mm-hmm.
And so Ritholtz's advice is basically stay out of the way.
Okay.
Don't interfere with the magic of compounding.
Yeah.
Particularly if you're young and you have time on your side.
Right. Just let it do its thing.
Exactly. And, he gives this amazing example of how $1,000 invested in the market could potentially grow to over $32 million over 100 years.
Wow, that's incredible.
It is. It is.
And, Warren Buffett is the prime example of this.
Yeah. He's doubled his fortune in just the last 8 years.
Amazing.
Yeah. And, Ritholtz reiterates Buffett's advice, which is just buy an index fund.
And hold it.
Exactly.
Yeah.
Very simple, but very effective.
Absolutely. Okay, so Bloomberg has a piece titled Wall Street TradFi Blockchain Bosses Call for Education, New Rules in 2025. So it seems like the traditional finance world is really starting to take blockchain and digital assets seriously.
Yeah, and they're saying that there are some key things that need to happen to speed up adoption.
Like what?
So one is regulatory clarity.
Okay.
They want to see clear rules of the road.
Right.
They also want to see more collaboration across the industry.
Amongst all these different players.
That's right. And they need to build the infrastructure that can connect blockchain with traditional finance.
Mm-hmm.
And then education is a big one.
Okay.
They say that, people just don't understand this stuff.
Right.
And it's a barrier to adoption.
And then standardization.
Absolutely.
Having, common standards.
Yeah. That's key for scalability and trust.
Okay, so a lot of work to be done, but they're optimistic.
They are. They are. And I think, what's interesting is that they're talking about this shift from private blockchains to public blockchains.
Okay.
And they're recognizing the need for global governance frameworks.
Right.
So public blockchains have this huge potential, but they need clear rules to really flourish.
Makes sense. Okay, so MicroStrategy is back in the news.
Okay.
Bloomberg reports that they're planning to sell $500 million of preferred stock.
Ooh.
And of course, a big chunk of that is going to be used to buy more Bitcoin.
Of course, of course.
So they are really committed to this strategy.
They are. They are.
The dividend rate on this preferred stock is 10%.
Wow, that's pretty high.
It is. It is. And you've got big banks like Morgan Stanley and Barclays involved in the offering.
Okay.
So that's interesting.
It is.
This is all part of a bigger plan to potentially issue up to $21 billion of preferred stock.
Oh, wow.
So they're not messing around.
No, they're not.
They are going all in on Bitcoin.
Yeah, it's a bold strategy.
It is. It is. And, it's interesting to see how they're using these traditional financial instruments to achieve their goals. Rescue of stranded astronauts is a win for Musk. This fund offers a ride on the SpaceX roller coaster. So SpaceX recently played a key role in bringing back some NASA astronauts from the International Space Station.
They did. They did. It was Butch Wilmore and Suni Williams.
Right.
And they had been on the ISS for longer than expected because there were some issues with Boeing's Starliner capsule.
Right.
So SpaceX stepped in and brought them home safely.
Okay, so a big win for SpaceX and for Elon Musk.
Absolutely.
Yeah.
Especially after, some of the recent setbacks.
So like the Starship tests.
Exactly.
Yeah.
So it really shows that they're becoming this vital player in space travel.
Right.
And they have this close relationship with NASA.
Absolutely. And the article mentions this fund, the Destiny Tech 100 Inc. Fund, which trades under the ticker symbol DXYZ.
Okay.
And this fund is a way for investors to get exposure to private companies like SpaceX,
Interesting.
which is their top holding.
Okay.
But the article also points out that the fund has been volatile.
Yeah. That's not surprising.
Right.
I mean, private companies are inherently risky.
Absolutely. Okay, so finally, let's touch on Tesla again. MarketWatch reports that Tesla's stock gets its lowest price target from a bull. It still implies 39% upside. So even the analysts who are bullish on Tesla are getting a little bit more cautious.
Yeah. And RBC Capital Markets cut their price target by 27%,
Wow.
which is a big cut.
Yeah. And what's the reason for that?
Well, they're saying that they're less optimistic about the rollout of the self-driving software
Okay.
and the robotaxi program, particularly in China and Europe.
Okay.
But even with this cut, the price target still implies a 39% upside.
Okay, so there's still some room to run.
There is, and the analysts also said that, concerns about sales drops in Europe and China might be overblown.
Okay.
Compared to the U.S., which actually saw some sales increases.
Okay, so they're not, completely throwing in the towel.
No, they're just being a little bit more cautious.
Right.
And, there's also this increasing competition in self-driving technology and robotaxis.
Right, so it's not just Tesla anymore.
Exactly.
But there are some potential catalysts, like the new Model 2 and the refreshed Model Y. So we'll have to see how it all plays out.
We will.
So to summarize, we've covered a lot of ground today. We've seen some optimism about tech and fintech, but also some concerns about the economy and the impact on consumer spending.
Absolutely.
We've seen geopolitical tensions spilling over from Turkey, and the Fed is still kind of a wild card.
Yeah.
Oil prices are facing some pressure.
Right.
NASDAQ is making a move to Texas. And we've had some interesting stories about Netflix and NVIDIA and MicroStrategy and SpaceX and Tesla.
We have.
So it's a very dynamic and interconnected and often volatile world out there.
Absolutely. And I think the key takeaway is that you really need to understand all these different factors.
Right.
The economic data, the geopolitical events, the company-specific news, because it's all connected.
Yeah. And it's all going to impact your investment decisions.
Absolutely.
So on that final thought, we talked about these contrasting analyst opinions on Alphabet and Ralph Lauren.
Right.
What do you think would make an investor more attracted to Alphabet versus Ralph Lauren? Is it their investment time frame? Is it their risk tolerance? Is it something else?
Right.
I think that's a question worth pondering.
It is.
So we'll leave you with that, and we'll see you all tomorrow morning with new headlines from major financial magazines.
Sounds good.
See you then.